Hello guys, welcome to the Trading Parrot. Bitcoin has managed to get very close to 100k. All of this within the context of an ascending broadening wedge as part of bullish continuation. I want to discuss about this pattern, what's the highest likelihood within this context, what's the invalidation. As part of the context, I want to include liquidation levels that are right above the price. So this is very time sensitive information because if we just took that liquidity and came back below, I am preparing to take action. We'll discuss some conservative and aggressive targets. We'll have a look at the order book to see what's going on at 100k using multiple tools, of course. And I'm very excited about this move because it might end up invalidating the thesis of entering into a bear market. Do not miss the part of the order book because there are some signals that you may not want to lose. Don't miss them. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Can we get 1,000 likes today? That will be amazing to slap the YouTube algorithm in the face, proving that this content is worth watching by more people. And if you're wondering what's going on with Google Trends, are people coming back into the space thanks to this move up? And just doing a quick look, you can see that there is no attention from retail so far. It's just you and me and a bunch of other dudes that are still trading around here. And unfortunately, 45 million stolen from Coinbase users in the last week. It's not that a big amount, but still hearing this from a reputable, supposedly exchange in the US, Coinbase, really does damage the image of crypto every time it happens. Apparently, this is all to do with social engineering scams. That means people reaching out to you via text messages, emails, Twitter, trying to convince you to do something or trying to convince you that they are part of the Coinbase team, and then people reacting to that completely naively, giving away access to their account of who knows what's going on, but they are really doing well, the scammers. So just be on the lookout. Never trust any link on any email. Do all the communications straight within the exchange. Do not log in on your exchange in any other computer apart from the one that you have dedicated to crypto. Make sure in that computer you do not install any extensions on Chrome. Keep it very clean and you should be fine. Here we have Roman, which I'm monitoring at the moment, is a reputable trader I really respect, and I share his ideas, but we are on the same plate here. We enter at the lows. Well, I did enter at the lows, but I took profits too early when I went for holidays, and now the risk to reward hasn't been great to re-enter on a long. And these sort of posts are confirming my bias, not towards the upside. There can be more upside. Indeed, I've been saying I am bullish for 2025. It's just that I am in the mindset of a swing trade, and within that context, just entering because the price is going up just doesn't make any sense, even if I agree that there can be further upside. And his point here is all to do with the volume. The higher we go, the volume declines the more. And that is not a good sign for a breakout to remain sustainable unless very quickly after we cross 100k we see a huge spike in volume. We'll have a look at that volume not just on the day, but I want to look at it within the weekly and monthly charts. Axel is pointing out a strategy in here, pretty interesting. Best framework for short-term trades in a bull market. Entry signal, MVRV set score below 0. That's the yellow zone. And the short-term holder breadth percentage, SMA 14 below 20%. That's the green zone. That confluence of the yellow with the green in here has produced the best entry in 2024. The best risk to reward, not the perfect bottom. The bottom was 49, so this one triggered around the 53.5, but that's still almost 100% up into 108. There's also an exit signal. I do recommend to follow him. He's got pretty good content, not just on Twitter, but also on CryptoQuant if you have an account there as well. And we got a new CME gap form overnight. This one is at 97,300 on CME Premium. And yes, everybody points out the same every time that we get a new CME gap. Not all CME gaps get filled. And I think that is a valid point, but that doesn't necessarily convince me to ignore them, because we could say that only less than 1% of them remain unfilled. In the past, we have one around 9K, one around 54K, and now one around 91, 92, and the new one formed at 97. So in my opinion, it is very low likely that we just leave all of them and just continue going higher. Possibly the 91 is going to take a little bit longer, but that 97 in here, even though it's very skinny, just $100 gap at the moment, I think it's doable that we close it very soon. Just an opinion, just a matter of probabilities. And the aggregated open interest finally shows that there could be potentially a reclaim of the support. That is a big deal because it signals continuation from the diamond pattern in here that could lead into the top of the range. The price has already broken out from the descending trend line and it has respected the ascending one. So price is healthy from the daily perspective, and now open interest is joining the party a little bit late, but hey, at least it's going in the right direction. In the breakout in 2024, we have a lot more healthy open interest. It was leading the move and price was following. In this case, price is taking the lead and open interest is following. And yes, I noticed that we have this ascending broadening wedge in the price on the 4 hour can be seen easily. You can tell in here that we have a breakout of the 4 hour. I remind you that in the past 2 or 3 videos, I've been comparing this descending channel in 2024 into October with the 4 pinches up and comparing it with the current situation. Again, a descending channel, and then we have had so far 3 pinches to the highs. So if this was to repeat the previous performance, it could get into 91. That is a big assumption. It's just something to keep in mind and to monitor. So far, it's not broken. We are already at 72, so getting into 91 is just around 20 points away now. But we are within this pattern. Is this pattern a bearish one? The answer is yes, but every pattern has a likelihood of playing out. And the ascending broadening wedge specifically doesn't recommend taking a short from the top of the wedge. If you do that, you need to be fully aware of what is the risk above the price. We're going to look at the order book and see if price can really break out from the upside. As we speak, the price is 99.7. The wedge pattern says there is highest likelihood of rejection in here, but doesn't guarantee it. And that's why it offers a conservative entry, which is once you get a rejection from 99.7 at the top of the wedge, to wait for a breakdown of the support at 94,300 and then an attempt to reclaim it, and that is your conservative entry. It also says that if you really don't want to miss a potential topping short right here, that you can consider a very small position that you can scale up once you get confirmation of the breakdown of the lower trend line, giving you reassurance while at the same time balancing out your addiction to adrenaline from trading. If you have that position at the top, the recommendation is to have a tight stop loss in case of invalidation to take a small loss. Personally, I'm gonna wait for some cool down. I'm gonna show you later why, based on liquidation levels and the order book. Stay for the detail, of course. And if you want to take a trade, consider doing it on Bluffing. If you don't have an account, even better, because if you open one with the link in the description, you can claim the following bonuses on the screen. Make sure you read all the instructions. This campaign ends on the 15th of May, so you still have time. This is a non-KYC exchange, so it's going to take you literally seconds to fund the account with crypto and start trading. On the daily, I have also some good news. It will be really, really awesome if today we were to close this green candle right above 97K without losing that potential new support. This red line in there is nothing but the point of control of the past 7 months. It is a big deal because being above the point of control puts the price back into the bullish area on the daily time frame. It's been an uptrend already on the daily. It hasn't had any pullbacks. It's been quite impulsive. And if it reclaims the point of control, we get pretty much guaranteed a move into the top of the range, which is currently sitting at 103.2. A rejection from the point of control is going to make this look mildly bad. We can still do it later, but it all depends on what sort of rejection hypothetically we get by the end of today, candle close. Let's say it's an ugly one that on the 4 hour loses the support of the ascending falling wedge. Well, that is a serious rejection, because that means that we went all the way to almost 100K. We took all this short-term liquidity. We achieved potentially even the target of the cap and handle, which is this pattern in here. Or if you want an inverse head and shoulders, it's the same. The target is still around 102. So the risk here is that we just go to the 102 and then immediately a rejection back below the point of control into the support or slightly below of the ascending broadening wedge. So this is going to be an interesting one. Let's look at volume. On the 4-hour, if we compare the bottom of the price in here, those big candles of volume, confirming that that is the structure that is going to hold the price at 74K. And then you compare with the declining volume all the way to the top of the price, you can perfectly see that this has been diminishing very aggressively. And we are running out of time to confirm that the volume is going to spike. I'm very interested to see if we go into 102, if there is a huge spike in the volume that is going to contribute to volume on the daily, which is also declining, and weekly as well. All the move up in here is with declining volume. Not necessarily something, if you are already in a long, to cut the long. I wouldn't cut the long because the volume can come later. For example, in here, in the megaphone pattern, from the bottom of 49, already the rally into the top of the range, which is 40%, 20K in Bitcoin. If you measure up until this week, the volume still didn't spike. It was the actual breakout from the top of the wedge megaphone pattern that started spiking the volume, confirming that this range was going to stay as the new range. In here, the volume remains to decrease, but I suspect that if we get into the big liquidity in here, we could get the spike. So this analysis is probably more applicable to people that are already in a trade and are looking for confirmation of an eventual all-time high and price discovery season, like this one in here. It is not a confirmation necessarily to say, well, once we get the volume, then we can enter. For example, in this area in here, I will get really interested to enter if there was a pullback with a retest of the bull market support band. That is a substantial move down of 12%, that from here could be also 12% into the bull market support band. But at the moment, the risk reward of entering around here, halfway between support and resistance with declining volume, has still the potential of failing. On CPR, we are about to get to 101.8. We are getting very close to the first resistance that is just 2% away, 2K away. And below the price, a move down to hit the pivots at the moment is at 8.5K down. And you can see that even on the monthly, the volume is very low relative to the previous ones. Of course, we are on the first week of May, so this has time to catch up. But exiting from the top of the range, that's kind of what you need to take away. Without putting a volume candle above the average, it is a sketchy signal to really confirm price discovery. And keep an eye on the open interest on this move in particular, that we have had a big move in the price, but definitely this time the open interest has spiked way beyond what the price has done. And the most recent move that we have similar to this was a move to 97 that then stalled slightly higher, almost at 98, and then started correcting into 93.9. We can look a little bit further in the past to see other instances like that. You can pause the video and you're going to see that most of the time, not all of the time, when the open interest runs too far away from what the price is doing in one direction, it tends to lead into a local top. We are still in the grid, but now only in 65. Yesterday was 67. Cerberus, after the buy signal, surprisingly is going all the way, getting close to a warning sell. Notice that during the megaphone pattern, we have plenty of buys and warning buys sideways throughout many months before an actual buy played out. The fourth buy was the one that played out in here. If it's the first one, it's going to be quite unprecedented. So yeah, the next liquidity that is tough is 100K, and price seems to be really finding it easy to cut through that and get closer to that liquidity. After that, we have a declining volume until 101. 102 has some depression there then it spikes back again at 102.6. Getting to 102.6 gets you really close to the top of the range of the volume profile. Longer term liquidity shows this area in yellow that ends at around the 102 again. The target of the double bottom, we say that it was going to be around 102.3. That target is getting closer and closer. Let's look at the liquidation heat map. We took already those liquidations there. We still have pending 92.7. And above the price 101.3. The past 30 days continue to have these buckets of 92.8 and 86. And let's look at the order book. Here is where I'm very interested to see what's going on. When we get too high amount of leverage in average across longs, we get this signal. The past two signals, this one gave a downside of 3%. This one started signaling from before, but from the top, it was just a correction of 2%. At the moment, we're getting the signal again. There is very little longs. You can see that now they are at 32, and that's the lowest amount of longs that we have ever had since even before November. Really low levels of longs. You can survive that low number of longs, but eventually you can see that the previous 107.8 had very little number of longs, and the all-time high was with longs around 49. Funding rates are in the positive at the moment, and the order book is showing 100k with 71 million of resistance. Of course, they can pull out that just like they did around here at 97.8. As soon as they pull out, the price started slicing the resistance. Purple whales are currently still pointing up. They took a dip, but then they are resuming with their trading to the upside. And let's look at the order book here at marketmonkeyterminal.com. 100k has 700 in liquidity. Right below we have some support with 567 and 500 in here. This support at 96 has been pulled out. This tool is free. You just type in Google marketmonkeyterminal.com, and it's been a great replacement for Trading Light, although I'm still missing from Trading Light to see the net longs shorts delta. I'm really curious what is showing by now. Fair value gaps show now a fat fair value gap that comes back into 97,500, followed by one right below this swing at 95,200. It seems like it's going to be not that difficult to take now the 100.8. That's because it coincides with high levels of liquidation levels. And I'm very excited now to see what's going to happen with the technical similarities between 48k around April 2022 that confirmed the beginning of the bear market versus this area in here. You can see that that was flagged when the RSI was not able to reach the now descending channel. We are already in a descending channel, and according to Fibonacci levels, volume profiles, that should have been 96.4. You can tell that today we have the option for price to put a daily close beyond that, and that will do something that we didn't do in 2022. I remind you that I observe these patterns closely because of the relevance and strong critical implications, but I have been very clear that I still expect highs for 2025. And just for the sake of having a rough idea, this RSI that is here far from the global resistance, not like in 2022 that it was pretty close to the resistance. If we made a trip into the global resistance at RSI 72, that could bring the price into 118.5 as of today. I think that level is going to be very critical what happens at that point. Let's remember that we have liquidity in here up until 116, and then we have a chunky leftover at 125. That is including all leverage, 3x, and everything. If we remove 3x, we have liquidity to get up until 117, very close to that potential resistance. Let's look at the bid-ask ratio, which is at the moment a little bit flat, slightly in the positive. They were trying to short this level of 97. I am not shorting that level yesterday, even though I talk about potentially forming a double top and be in the lookout for that potential scenario. What we ended up seeing playing out was the 4-hour retest continuation to the upside. The delta at the moment is putting the longs with 626k of additional risk against the shorts, and that could bring a good alpha to look out for a short, not necessarily right here at these prices where we still have the risk of the price taking a little bit more of liquidity and completing the technical targets up until 102, but somewhere around here I will expect some retracement, also considering that we have this band of resistance at 100k. At the moment, the move of Bitcoin is being influenced by what the Nasdaq is doing. So let's have a look at what's going on with general markets. I'm going to start with the DXY, which is getting very close to that potential breakout. It's right there at the resistance of the weekly, so nothing confirmed, but is doing everything that is possible in this area to potentially put patterns of reversal. Dollar is still being held by the highest close of 3.3k. It's just weakened to the upside, contributing to form a topping formation. The more wicks we try to put to the upside to break out beyond the 3.5 without being able to do it and then getting sold out, it's confirming a potential distribution around this area as opposed to patterns that are actually going to break with a new all-time high. And you can see that today we have a better picture for potentially a topping gold with the RSI weekly now below the lost support. We're just at Thursday, so there's still time for this to change. But you know, I love keeping an eye on how things are developing. VIX keeps to push down, and I think after these big expansive moves, this is starting to slow down to the downside, so we should be expecting some push up eventually from here. Nasdaq seems to be in progress reclaiming 19.9, but the biggest event for Nasdaq in here is what's gonna happen once it reaches back the lost support on the weekly. Are we gonna see a breakout from there or further rejection? And I think in this line at 53 is where I have all my eyes all the time. If Nasdaq and S&P gets a rejection with further downside, there is no damn way that Bitcoin is gonna carry on. If Nasdaq breaks out this line and puts a move into 57, the next resistance, we could see Bitcoin do that heroic next move up. If Nasdaq and S&P breaks out and continues to the upside with potential rate cuts incoming, a rally with that narrative, well, we could see something bigger then. But that's why it's so important to understand what's going on. S&P pre-market also is showing 5 points to the upside. That's definitely healthy for continuation of Bitcoin, with the exception of Google that yesterday took a dip thanks to the bad news and now is pushing back up again. Remember, I say I think it's an overreaction to just sell off that much because some news about Apple putting out a competition product that is just too big. And you can see that is already kind of recovering part of the losses. Apple 2 points up, Nvidia as well is pointing up, and it seems that maybe, just maybe, I'm not gonna get the full wave 4 that I was expecting. Pretty much every stock, Amazon, Tesla, they're all up. Palantir, interestingly, could be putting a double top in here, although it's 2 points up relative to yesterday, but with huge bearish divergences. If we confirm this week close like this, that is on Palantir just more of the channel down that we already flagged in here after the breakdown around 6th of January. Even the move of the last all-time high in here that went into 84 is still with a bearish divergence, that one here, so we'll continue to monitor that. Microsoft up, Meta up, MicroStrategy up after reclaiming with a double top, double bottom, the 300 mark. Guys, if you want to trade $500 for free on any of the coins in this list, decide the leverage to do a long or a short and then get to keep the profits from those $500, you can use my position airdrop. There's a link for Bybit in the description. Just open the link and click register to claim. There's still 29 days to take advantage of this promo. Thanks so much for watching and let me know what you think about the price of Bitcoin. What's left for this week? What do you think is currently driving the price up? Do you think it's just liquidity? And more importantly, do you care about the volume coming down? I'm really curious if you actually incorporate volume in your trading. I'll see you in the next one. Take care. Bye bye.